Air Canada stock is down after the company reported earnings. Up until recently, it seemed to be doing well. What's wrong, and could this be a good time to buy on the dip, or is Air Canada stock likely heading lower? Let's take a look at the airline's recent earnings numbers, news events, and the stock's price to see whether it's worth investing in Air Canada today. In Q2, the company's revenue rose by just 2% year over year to $5.6 billion. The bad news was its earnings were down by 55% to just $186 million for the period. The company's margins took a hit, and that's evident in its CASM number, that is cost per available seat mile. It tells investors how efficient its operations are. A year ago, it was 13.53 cents, but it rose to 14.4 cents this past quarter. Things like foreign exchange, fuel costs, and market conditions can all affect this metric. It wasn't a great quarter for Air Canada, as it was down on a lot of key metrics, including earnings and free cash flow. The company's long-term goal, however, is to hit more than $30 billion in revenue by 2030, which implies an annual growth rate of around 7% to 8%. That's decent, but it doesn't really make it an exciting growth stock by any means. And it may not matter too much if the company's bottom line isn't doing well. And the problem is, things may get even worse. Recently, nearly 100% of Air Canada's flight attendants voted in favor of job action, if it's necessary. And the strike notice can be issued as early as this month, which would be a devastating time to interrupt air travel, right during the busy summer travel season. And it's also when economic conditions aren't ideal, with tariffs hitting Canadian companies hard and things potentially getting worse in the near future. There may be a decline in travel demand as it is, and a strike only makes things worse for Air Canada. It was less than a year ago that airline pilots threatened to strike. They ended up reaching a deal that would result in a 42% wage increase spanning 4 years, with flight attendants also potentially set for large increases as well that may also add pressure on Air Canada's shrinking earnings. Between demand possibly diminishing and costs also rising, the airline is going to get hit from both sides, and that could mean more trouble ahead for the stock, especially if investors aren't feeling too strongly about the Canadian economy. Year to date, Air Canada stock is now down around 15%, but it's still not near its 52-week low of $12.69. It has a long way to go before it gets back to around those levels. The stock's 20-day and 50-day moving averages are all above the 200-day moving average, but that could soon change given the downward pressure on Air Canada stock. According to analyst price targets, Air Canada's stock could hit close to $26, which would imply an upside of around 36% from where it is right now. But at that valuation, it would be around its 52-week high, and even then, the stock has not often stayed at those levels for long, even if you go back to 2021. While there have been some spikes, the stock has struggled to stay above that mark for too long. I'd expect the stock to get to $25 only under near ideal circumstances, with demand looking good, profits rising, and the outlook for the economy being encouraging. Right now, none of that is the case, and we're still in the early stages of a trade war with the US. The worst could still be yet to come. Recently, the Canadian Federation of Independent Business, the CFIB, projected that for both Q2 and Q3, Canada's economy is projected to experience negative growth, which would mean that the country is entering a recession. And if that's the case, you can expect a lot of pullback from travelers who will be trying to save money and avoid discretionary purchases and travel. Air Canada stock could be in trouble in the near term. Previously, I said it was a good buy at around $14, and I wouldn't buy it again unless it were to drop around those levels, because I think it could be headed there. This is a stock that has been bouncing between $14 or $15 and over $20 in the past couple of years. Without a big catalyst to send it up in value, I wouldn't expect a big increase from here on out. If anything, a recession or even the fear that it may be on the horizon could easily send this stock to new lows. And that's why for now, I'd hold off on buying Air Canada stock. With trade negotiations not progressing with the US, a strike on the horizon, earnings deteriorating last quarter, and a possible recession coming, and the stock still trading at just around $19, there isn't a good reason to want to buy it right now. Not when there are so many reasons the stock could get dragged down in the near future. I'd set a price alert for $14, and if it falls below that, take another look at the stock. But for now, I'd take a hard pass on Air Canada. Let me know what you think about Air Canada stock in the comments, and if you're buying it and what your thoughts are. And please leave a like if you enjoyed this video, and be sure to subscribe for more videos like this. Thanks for watching.